What is happening, traders? Thank you for tuning in. Today we're going to be looking at Best Inc. It's a Chinese logistics company. I was watching them last year around December. They were sitting around $2.50 back then. Let's see if I can find this in November. So right here, yeah, I was looking at right around this area right here is when I was looking at them, and they were in a downtrend, a bearish trend. So I decided it wasn't time yet, and I didn't get in, which was an okay thing. I could have gotten out a little higher over here, but that's not really the play I'm going for. So I did just get in recently when it was below 150 at the 130 range. I bought 20 calls out in October, 250. I'm swinging these. I don't plan on executing these, and so I'm looking for a nice run up. I'm going to show you them here in a little bit. I am going to go through what Best is about, what they do. They're going through a little bit of a restructuring period. Alibaba does own about 33% of them. The CEO owns another large portion, another Chinese firm owns another large portion, and the fourth shareholder owns another large portion. So the top four investors own 51% of the company. And I'm going to go through a little bit of history on what has happened with Best and where we're looking and where we're sitting right now. So to start off, we're just going to watch this video on Best Inc. It's honestly going to give you a little bit of an inside look onto what Best is, tell you what they're all about. So here we go.
Welcome to a world of new retail in China. Our vision is to leverage technology and business model innovation to disrupt and transform China's inefficient logistics and supply chain industry. Our story is an integral part of China's growth story, where hundreds of millions of consumers with increasing disposable income want to buy goods and to have what they want, where they want it, delivered in the most convenient way. Best is a leading smart supply chain platform that combines technology, integrated logistics, supply chain management, last mile services, and value.
Now, make sure you guys keep these in mind because these are their different subdivisions that they have, all for Best Inc. These are really huge. Now, this is where they make their money, so it's where they operate their business.
Services. Our multi-sided platform brings together merchants, franchisee partners, transportation and other suppliers, and consumers. Merchants outsource their supply chain needs to us so they can focus on their own businesses. Franchisee partners, transportation, and other suppliers provide services to our platform, and Best Capital provides customized financial services to support their operations and growth.
Now, Best Capital may be broken off. That is subject for debate, and we'll see if it happens.
Consumers receive goods through our comprehensive service network, enhancing their shopping experience. As our platform grows and our service expands, it attracts more participants and leads to more usage. More usage results in more data analyzed, enabling us to create more services. Our ecosystem is rich and growing. The combination of our people, innovative culture, a robust technology infrastructure, and a flexible asset-light business model has enabled us to become a market leader in just 10 years. Best Cloud, our proprietary technology platform, is the backbone of our integrated services.
Now, this is the key, I believe, to Best Inc. is that they have their own technology, and it's always being developed. They're always putting money into it, to R&D. They're trying to retain their talent for this. This is, I think, what's going to set them apart from the competition, but that's for another topic. This is only the first video I'm doing on them. I'm going to swing this, but I do like Best as a long-term hold as well. They present a very good opportunity into a very big market at a very cheap price right now, and I'm liking what I'm seeing so far. I'm going to finish watching this video, guys. There's not going to be too much more on the Best website. They do have earnings coming out June 8th, and so we're going to dive into the earnings then. I'm going to make another video on June 8th. So this video is not going to get into their financials, how much revenue, their costs, how much loss, none of that. We're just going to be finishing this video. Then we're going to look at the chart. I'm going to go over an article that I've read, and that's going to be where we're currently going to start with BEST.
Powers our ecosystem participants to operate their businesses effectively through a diverse range of SaaS-based applications. It collects and analyzes massive amounts of data and allows us to improve operating efficiency and create new services. Being asset-light allows us to maintain flexibility and control and achieve scale at low cost. We lease our facilities and outsource our transportation needs. We franchise most of our Best Express and Best Freight service stations and a majority of our Best Supply Chain cloud order fulfillment centers. To expand our last mile network, we launched Best Store Plus in 2015. Best Store Plus offers online merchandise sourcing and store management services for convenience store owners, which streamlines their supply chain by eliminating layers of middlemen.
Now they're actually doing away with the Best Store Plus. It's going to be no more as of this November 2020. They decided they were going to do away with it, and so they're slowly phasing them out. Just keep that in mind.
We leverage these stores as our last mile network partners, providing customers with services including in-store pickup and drop-off. We have a vast total addressable market and have seen sustainable growth across our multiple service lines. We are just getting started.
Now, keep in mind these numbers are old for them, but relative, they're still in a very big market today. They still have a very good chance to grow and expand. There's a lot of franchise stores. They have a lot of hubs. There's a lot going on for them. They've just been in a bear trend. They are in high debt right now. Again, we're going to get into their financials and everything when their earnings report comes out on June 8th. We're not going to look into it in this video right here, guys. We're going to take a look at the chart right now. Now, this is a 45 minutes. We can go to the 1 hour chart. That'll be a little more where I want to look. The price is currently sitting at 148. Let me break my big head out of the way. 146 right now. And so what I'm looking for is this orange line right here is a 50-day EMA, and this purple line right here is a 200 EMA. So I'm looking for a shoot over this tomorrow morning when we open. We should expect a nice run up somewhere in between here, and if we break this top resistance line right here, I'll get an alert, and if that alert goes off, that means we're full go green, boys. But we'll see. Don't get too excited here. It is a penny stock, and we are waiting for a confirmation of a reversal of the bear trend that it has been seeing. This red line is the bear trend line that I drew. We broke it here. We retested it here. And now tomorrow, I think, is going to have to help us and really solidify if we're going to break it again. And if we fall below, I think we're going down here, 120 area, maybe even lower again. So I hope that Chinese stocks and ADRs, they take a nice big jump. Just off the technicals, this is looking really nice, a real nice setup. The MACD leveled off at the end of the day, which is a good thing for us. Now, meme stocks are going crazy right now, stocks that are heavily shorted. BEST is a heavily shorted stock. It was on the top 10 heavily shorted stocks under $10 on FinViz when I looked a few days ago. So it is something to watch, guys. Not telling you to get in right away. I'm just telling you to watch it because we are expecting a move up here. We bottomed out right here, and we're expecting a move up. All right, now we have a little article. It's going to give you a little bit of context, a little history on BEST Inc. So I'm going to read the article to you guys, and this is kind of going to leave us where we currently are at today. So the New York listed BEST Inc., a Chinese logistics firm backed by e-commerce giant Alibaba, is considering a sale as part of a strategic review. So with the endorsement of Alibaba, its biggest shareholder, BEST had tapped financial advisors to explore more options as its shares have been underperforming and are worth a fifth of its IPO price in 2018. Billionaire Jack Ma owns 33%, CEO Johnny Chou 11%, and they are both considering selling all of their stock, all of their shares. The government has been cracking down on monopolies. Alibaba in particular, the Ant Group, if you guys don't know, Chinese ADRs were in a little bit of a bear market just because of political tension for a little while. But they seem to weather the storm. I don't believe that China is going to crack down too hard because it would stop their success. It says no formal sale process has been launched, and the company and Alibaba have not decided which option to take. As the strategic review is still underway, caution the individuals. Whoever is talking about this probably shouldn't be talking about it. She said that Cho continued to believe in the bright future and long-term value of Best, but he had no plans to sell his stake. So they said that that was false, but there's always some truth to all of these rumors. The company had a market value of $790 million at the time of the writing, and I believe at the time of the writing it was like $2 and some change. So yeah, it's sitting at $1.50 now, a little less. So the market cap is definitely down, somewhere around $500 million.